Hi everyone, it's Elizabeth Rose. I have so much information I want to share with you, and I'm going to try to condense this. I'm going to try to talk fast and get it all to you quickly. I wanted to talk to you about housing. Housing has been doing phenomenal. If you've opened a newspaper or listened to the television, you know it's been taken off this summer, and boy, looking good it is. Here's some data as we look back. We've got data coming out this month, or this week, excuse me. So I wanted to take a look real quick at last month, what we saw. Case-Shiller and CoreLogic both told us that home prices have risen 12.4% year over year from July 2012 to July 2013. So that's a pretty amazing improvement, and certainly here in the state of Texas, it's phenomenal since we would get tickled with 6% because that's kind of the high end of our growth rate here typically. So 12.4%. Home sellers should be feeling really confident about putting their house on the market. Some other data that we have looked at, and this week we get a new read of the latest data from the National Association of Home Builders. Their index ticked down just one tick last month from 59 to 58. We'll get a read on that on Wednesday. And home starts were up, but building permits were down. Building permits are a leading indicator. They kind of give us a foretelling of what we may expect this month and next month as home builders gear up to wind down as we come into those slow months of the year. It's pretty much a seasonal thing. I don't think it has anything to do much with the economy or with housing. I think it's just preparing for the end of the year curve. Something else that we need to be aware of, a little bit of a headwind that we may have as we enter into January of 2014, and that comes from the mortgage industry. We have additional rules and guidelines that will be rolled out effective in January from the Dodd-Frank Act and from the CFPB. And what these involve is a QM, a QRM, ATR, all sorts of alphabet soup, but basically it's a qualified mortgage, a qualified residential mortgage, ability to repay. There's some restrictions on mortgage lenders as to what type of loans that they can do, as if we could do a lot to begin with from the last 5 years. But there's going to be further restrictions, and with that also is a new guideline of debt-to-income ratios, and it will be a hard stop. There will be no flexibility. There's no compensating factors. You cannot get past this hard stop debt-to-income maximum. So home buyers will need to be equipped to deal with this. They need to get their ducks in a row in advance if they're going to wait until after January. And it could squeeze some buyers out. The other headwind is, and this is still rumor mill, but it's a powerful rumor, and it's pretty legitimate because the entity themselves started the rumor, FAFA. And they said that they were looking at bringing down the conforming loan limits. What this means is right now the conforming limit is at 417. They're going to lower that. If they lower it to 400 or 390 or whatever it is, anything above that will be a jumbo loan. Well, jumbo loans have been looking pretty hot lately. They're right in line with a conforming loan rate, and they're equally as attractive. Here's the thing, though. Some buyers may not qualify for a jumbo because a jumbo will require a higher down payment in most cases, and in most cases, a higher credit score. So we need to be prepared, if we're a home buyer or if we're a realtor, be prepared in coaching people through those changes that are on the horizon. And then the other thing that we have right now working in our favor, and there is absolutely no crystal ball that will give us any indication of how long this will be here, but my best guess would be not very long, and that is we have a moderated, a softened interest rate. In May, interest rates ticked up, and that was due to all of the Fed conversation about the tapering of their asset purchase program, aka mortgage bonds and treasury bonds. And on the September 18th meeting, they came out and said, okay, we're not going to do it right now. The economy's not ready, hasn't improved enough. And now they still get on the stump and they still talk about it, and it still makes the market move. But that news helped the bond market settle in. And then we got a little ride of safety haven trading as money started flowing into the bond market on all this fear factor, if you will, of the debt ceiling, and then the continued uncertainty of the debt ceiling and what's going to take place with that. So mortgage rates have stayed in a nice level. They improved after September 18th, and they've stayed in that same trading zone, which has been really nice. Now, what happens if on Thursday there's an agreement, or next week, or whenever it comes? It will come. We all probably believe that. But once a debt ceiling agreement is reached and put into place, then what will bonds do? I don't know. Stocks were rallying today a bit on the news. The bond market's closed. But anyway, these are some things that we need to keep our eyes out for. It does affect our housing market, and there's the housing data, there's the mortgage market data, and then you've got Wall Street traders and just the capital markets at work. So let's pay attention to all of that. It's all looking really great right now. It is a fabulous time for your home sellers and for home buyers. And honestly, don't know what next year will look like. So take advantage. If you're thinking about it, take advantage of it now and at least explore your options, and then look at what your options may be next year if you decide to wait. So that's all for now. That was a lot. Tried to go fast. Hope you have a great day, and please let me know if you have any questions. Love to hear from you. Thanks. Bye.